Welcome to this episode number 113 of Your Next Trade. So many things to discuss today, from macro to price action, where we're going to see for this session that we had a week of risk off. But that might be the last video of the season because as a French, August, I should be taking a month off. We'll see. I'll see next week if I'm keen on doing another one. But let's start with the big move that started on Thursday due to the tariffs. So that was the end of the month. That was the end of July, where we had quite a strong month across asset classes. And starting, mid-session, the market really started to sell off. And we had the follow-up on Friday with the job market in the US. So what is the job market every Friday? Every first Friday of the month, we have in the US the NFP, the non-farm payrolls, that gives you how many people are hired or fired in the US. And the number on Friday ended up roughly around 75,000. But the most important part was the revision in the month of April and May. And the first reaction was pretty much that the market was selling off. And then we had a Trump reaction saying that the number is fake. So as always, when it's not going your way, what you can say is actually the number is fake. And most interesting is you saw many retail traders that are saying, it's a fake number. It's not, it can't be changed. So probably people that have been trading the market for the last 2 years. But, for the NFPs, it's pretty clear that the variation, the delta could be 100 to 150,000. So, you should not be looking at the 20, the 50 changes, 50,000, but more or less what has been the trend. And as you can see, that is something that we pointed out over the last few months and years. Since COVID, the numbers have been coming down. So first number is obviously due to COVID. We don't have that many job creation that we had in 2021, 2022. So that has been the trend. Second reaction is because you do have the effect of artificial intelligence that create tension in the job market. I've been talking to several of my mentees that are doing consultant, and that have been struggling. And if you look at names like Accenture, if you look at Capgemini in France, that is pretty clear that some jobs are under pressure. And finally, guess what? Due to the uncertainty of tariffs, the last 3 months, it's harder for companies to have any visibility. And that is why as well that we are seeing less job creation. As always with job creation, don't get me wrong, this is a lagging indicator. So we should be careful, but that tells you the same picture like we had from the GDP numbers that came out this week. GDP numbers came out roughly 3% plus. So this is a good number, but it's mostly due to the fact that imports have been coming down massively. If you look at the core of the retail, the US consumer, it's just up 1%. So clearly the US economy is not as strong as what some want to be believing. So what have been the repercussions? Many things to discuss looking at this week, looking at the week-to-date asset performance. So unfortunately on that chart, you have the massive distortion coming from the copper due to the tariffs on and off, and the copper was down 20% on the week. But overall, as you can see here, most assets, most stocks have been down on the week. We are talking 2.4% for S&P. What is interesting is the beta to the tech has not been playing its role. Why? Because tech, the market leaders, is still leading the market and it's outperforming the market. So as long as tech and the big tech are outperforming the market, you are in the same kind of market. As you can see, Russell really underperforming massively. So that started pretty well in the months of July, but as a reversal, we now have the Russell small and mid caps that are underperforming. Euro stocks and Japan as well underperforming. Second part, which is FX. As you can see here, dollar has been pretty strong despite a big move, let's say 50% retracement on Friday, but overall we are at 116 versus the euro, and Bitcoin crypto giving back a bit of their performance that we had in the months of July. Same for Ethereum. So what about the week-to-date industry performance? Because this is the interesting chart. As you can see, this is your S&P, so this is your And this is your index, your benchmark. You have the Nasdaq close to it. And as you can see, you get many industries that are underperforming the indexes. Why? Because it's the same, the big technology, which have 30 to 40% weighting in the S&P 500 have been doing pretty well due to the Meta and the Microsoft results that were pretty good. But overall, as you can see, left-hand side, many industries that are underperforming. We are talking nuclear, we are talking transportation. So actually what is interesting is we see many cyclical sectors that underperform. The only three winners for the week, we are talking gold. This is risk off, natural. You do have like the US dollar, same. And finally, utilities. Why? Because rates, as we're going to see later, have been coming down massively. So what about the sector's performance? As I've been telling you, IT minus 1.9% outperforming the overall market. So the leaders are still leading, but really the interesting one that we're going to be checking today is the materials. Materials, we saw Dow Chemicals and some others being down and massively down. This is something that we flagged a couple of weeks ago when we said, if and the companies that are missing the expectations, both in terms of EPS or sales, have been punishing massively. That is both in the US and Europe. For Europe, I think this is something that we have not seen for the last 10 or 15 years. When companies are missing, they are roughly down by 7%. So big moves. As we said before, utilities outperforming, but overall, 10 of the 11 sectors of the S&P have been down on the week. So rates, this is the interesting part. As you can see, the US 10 years, 422, we are down 17 bips on the week. So we are still trading between 420 and 450, but due to the NEFPs, to the job data that we had on Fridays, that were much lower than expected, especially the revisions or the 3 months trend. Now we are expecting the Fed to be more accommodative going forward. So on Wednesday, we had the FOMC meeting when Powell said, I'm data dependent. We are not going to hurry to do something. But actually, it feels more and more like due to these NFP numbers, as we're going to see now into the Fed funds rate expectations. This is here, that for the month of September, we're going to have a cut. So it's roughly 80% to 90% chances that there's going to be a cut in September. And as well, we are back into now having 2 cuts for 2025. So we are back to the scenario that we had at the start of the year. 2 cuts in 2025 and a first cut in September. As you see here, the changes from last week, if you look at the blue versus the red, we had the change that was mostly for December. So what about all of this translate as well into higher volatility? So the VIX, the 1 month volatility is at above 20%, and for the 9 days at 19.5. This is something that we discussed on the trading community for the most advanced channels when we have been saying, when volatility is dampened like we had in the months of July, 15% for the month, you have more and more tendency that people are too complacent. And you could have a reversion to the mean. So we shared documents about, VIX calls and how the volatility very much often due to these forced sellers or, many funds that are selling volatility that you see in bonds in volatility. So this is what happened. So let's go now into the technical analysis. Let's start as always with the S&P. So with the S&P futures, the first thing first is the trend that started in April from the lows has been broken. Okay, so this is pretty clear. We had 2 big days with decent volume actually on the 2 days, both at the end of the month and for the start of the month. So really significant volume versus past the sessions. You saw the first support is the same now. It's on the 50 days. It's roughly 6160. So that will be your first support. If you look at the Nasdaq, the picture is a bit better because obviously Nasdaq has been outperforming a bit the market. But if you do same kind of dodgy technical analysis, this is the same kind of level. So you have really 2 to 3% just for a small correction, 5% from the top. Some other chart that we want to be looking at, this is the euro dollar, because people have been trying to top the market and been saying, this is what the euro is a short now. pretty much similar chart where you have the lows and a big trend since the lows 102 to 118 last 3 days, 4 days actually for this week. Why? Because the Trump tariffs 15% on Europe. Coming from Europe, that is pretty shocking to see that Europe has been keen. I guess they didn't have a choice, and it was 15% to swallow. But that is a big number, and that tells you that the call of having a strong euro that was said over the last 4 to 5 months is a bit vanishing. And this is why we had this big move. Interestingly, as you can see on Friday, as I said, 50% move retracement. So my view is there is less liquidity in the FX market, but the trend is the same, is broken now for the euro. If you look at the dollar yen, we had some massive move as well after the Bank of Japan decision. But as you can see on Friday, really big
LAFC
move. So
to 10 women advanced talks for record breaking transfer.
Is the market really on Friday and Thursday across asset classes moved really, really big. That's the same if you look at the crypto, one of the two that has been very strong, Ethereum, gave back some of its performance. I'm interested into several charts. Microsoft, so very strong numbers, very strong earnings, and the stock, gapped up on Thursday, giving back. So we're probably going to go back into this 512. Which is the trading channel. Meta, that's something that I traded this week just after the earnings. Actually, I bought the 750 put, and I just managed to end up a bit up on the week. So if we look at the something that we discussed on the trading community, there was a lot of open interest at 750, and as always, when you get this magnet, the stock end up at 750 all one. So pretty much the level. But as you can see, very strong days with big volumes. So those are for the leaders. Two other charts that I want to share with you. It's the materials that we discussed, very weak on the week, and as you can see, the trend is not your friend. So here, this is the XLB versus the S&P versus the SPY 500, and as you can see, the trend is down and down and down. So don't go against those trends. If you look at Dow Chemicals and some others that were down 30% on the week, you had the story that was written on the wall for months and months. What about finally something, this is the meme, and so this is about ARK and the number of shares that have been created. So interestingly, this week there's been a bit of bump of new ARK people subscribing, but the trend is still the same, coming down and down and down. So this is for the dodgy technical analysis. Let's go back into this week and what happened for the week. Starting with the S&P futures, as you can see, not much happening. Why? First, when we started the week, because volatility was compressed, both realized and implied. And then we had a bit of a hiccup with the FOMC meeting. Not much, are you going to cut? No, I'm not going to cut. But why are you not going to cut? But I don't want to cut. So, and after that, we had the end of the month and the start of the tariffs. And then we get the NFP numbers and really the trend coming lower. So that is for the S&P. You can do the same for many charts. But what is important as well is on Thursday, we had the PCE number. So this is the inflation. This is what the FOMC is looking at, what the Fed is looking at, not necessarily at the CPI, but more the PCE. So, and as you can see here, the core PCE month on month recently has been coming up. So on one hand, you can argue that one of the mandate from the Fed is not going in its way, which is obviously the job market, a bit less creation. But as well, what is happening, you have a bit of pickup of inflation, which is roughly at 2.93% year on year. So it's above its mandate. And this is why the Fed, looking back at how the mistakes they made in 2020 and 2021, they're probably not going to be in a hurry to cut Right, so this is why as well the market on Thursday started to sell off, because literally there is a bit of inflation. We had the ISM manufacturing on Friday, not great numbers, both in terms of the different sectors that have been struggling. The new orders are a bit better, but are still into negative. Tariffs headlines, as I said, and the earnings season. So this is pretty much the same chart as we had last week, where we explained that the earnings season now, it's 66% of the companies that have been out. And as we can see here, the sales have been higher than usual. EPS are pretty much the same. So companies on the top line doing better, same on the bottom line versus history. But what is important is you should be looking at the price reaction across sectors and industries and names. And the materials have been doing extremely badly. And materials, get what? This is some of the companies that are really punished and are suffering from the tariffs. And as well, that gives you a bit of how the economy, how the cycle should be doing going forward. We mentioned as well DXY, Fed fund rates, because obviously that was across asset classes. So what about the catalyst? We do have for this week on Tuesday the services ISM and PMI. So this is for your leading indicator. We have the Bank of England rate decision, where we expect them to cut by 25 bips. There is tons as well of earnings. As you can see, we are talking AMD, Caterpillar, we are talking Eli Lilly. So really big names, not as big as we had for the most last 5 days, but as well going forward, we are all waiting for Nvidia. That will be later in the month. So a bit of macro, tons of earnings still. We're gonna have the tariffs headlines, and as you can see, the SPY weekly straddle is now for a move, expectations for plus or minus 1.9%. As we discussed last weekend, volatility implied was very much compressed at plus minus 1.3%, where we had tons of catalysts. We had the FOMC, we had the tariffs, we had the end of the month, we got the NFPs. So really, there was a mispriced of implied volatility at plus minus 1.3% with so many and so packed actually drivers and catalysts. So this is why that on Wednesday I bought some. It was 636 put on the SPY, where literally when the market was trading at 638 and the cost was 2.5, and I managed to get out with the delta at 10, so from 2.5 to 10, so pretty good trade. But overall, now volatility is picking up a bit, and I'm interested into the seasonality. So this is for the S&P 500, and as you can see, for the last roughly 30 years, the months of August, but most importantly September, are not that great. So you have a bad seasonality due to flows, due to taxes in the US, so that explains as well why the market could be struggling in the next few weeks. So you do have as well some Fed speakers and as well some bond supply coming into the market, with yields coming down a bit most recently. So I might have been missing some of the stuff, but overall this is what we have for the market. Let's end that and look at what you could do with us. So that's a 4x4 video series and all the mentoring. So this is one-on-one sessions that we do through Zoom, and we teach you how to do the same process that you have here. So we go from the big macro, we discuss the market, then we go into the quantitative analysis, then the qualitative analysis, then we teach you how to do the risk management, how to put a position if the risk reward is good enough. We're going to be looking at stock, we're going to be looking at across asset classes, pair, we're going to be looking as well at special situation and how to put this trade in place. We could do options or no options. So this is more or less what we do. We have as well a trading community on Discord, where we have one big channel that is for free, and we have 30 big channels that are beyond a paywall that you can subscribe to. There are tons of good ideas to play with. So this is it for me for this week. That might be the last video, the last episode of the season, and we might see each other in September. I'm not sure, depending of what I'm going to do in the next few days. This is it for me for this week. Have a good trading week. Bye-bye.